What's going on, everybody? Welcome to another edition of Weeds Weekly with yours truly, Kevin Weedmark, where I am going to break down what happened this past week. We're going to talk about the upcoming week. We got inflation data coming, and as I've said before, inflation is boss. We're about a month out. I want to talk about what that means, the incoming administration, what their goals are. And the last thing I want to talk about is small changes make a big difference. Why we should be touching our clients right now and alerting them to the fact that we're going to have a bumpy ride for Q1 and Q2. So we want to make sure we jump on those small changes. So let's just dive into what happened last week. Last week, we brought sexy back. And what do I mean by that? We got low interest rates once again. And I don't mean low, we're not back down to 3%. But what I'm saying is it's the lowest that we've seen in a couple months, and that is reason to get excited, right? We're looking at interest rates in the lower sixes, mid sixes to low sixes on the conventional and jumbo side of the house. And on the govy side of the house, we're looking into the low fives as far as base rates go. So overall, it was a great week for that. And the biggest thing was just jobs. Jobs was all the talk of the town last week. A lot of the numbers came in right around expectation. I think the biggest thing we saw is the non-farm payroll numbers, right? Wage increases were positive, 0.4%. But what we're really seeing is once we dissect that non-farm payroll number, yes, it beat the number of 200,000 to 227 is what I believe. But once you break it down and you start dissecting it, what you're realizing is that a lot of it is government heavy. And what we're going to have is we're going to have a transition coming in from one administration that was really geared towards growing government to another administration that is going to reduce regulations, is looking to trim fat out of government. And so you're going to see a pendulum shift. And like I said, once you look at those numbers, it's going to take a while for that effect to happen. So I expect a little bit of a bumpy ride as it pertains to the labor market. But the good news is coming into this week now, inflation is once again in the headlines. We got CPI on Wednesday. We got PPI on Thursday. And as I've said it numerous times, inflation is boss. Long-term inflation is the Fed's biggest fear. And I think what they should do is pause on December 18th. There's now an 82% chance that they're going to decrease the Fed funds rate. But should these numbers come in this week, high on the inflation side, if they beat forecast even slightly, I think that number changes drastically. And I think you're going to see the Fed pause. And I think that's the thing that they should do. Their next meeting is not until the end of January next year. The new administration will at least have had 10 days to come in and implement some policies, at least talk about them very quickly, give the Fed a better idea of what they're going to do and what they want to do right away and what they think they could get passed right away. And it would really help the Fed understand what it has as far as an effect on long-term inflation and the labor market for that matter. And I really think that they should pause and think about that instead of trying to get ahead of it. The other thing we're going to see is we're going to see them to release the dot plot. It's going to give us a great idea of the expectations of where all Fed members believe that Fed funds rate is going to be. So that's another thing to look for this week. And then the other thing is now every week matters, right? I mean, we talk about it all the time. Initial jobless claims will be coming out this week. The labor market, once again, is always in the the highlights, I should say. So it's going to be something they look at. And the other thing is the geopolitical front. Now we have another thing right in the Middle East. We had the fall of Syria. That could potentially be something that we really want to keep our eye on. How involved does the U.S. get? And the bigger picture is, what does it mean for crude? What is crude going to be trading at? Right now, crude has been down 6.2% this year alone, which has kept inflation, I think, moving down just a little bit because obviously the cost of energy for us here domestically and transporting goods and services and everything like that, obviously it affects pricing. What is that going to do to the price of crude? Is it going to push it even lower? Is it going to increase it? Is there going to be turmoil? I think it's something that needs to play out, and it is going to be something that I believe has the potential to affect interest rates here stateside, which is crazy. The other thing right now is we're just over a month away. It's amazing to believe, right? January 20th is going to be the inauguration. And make no mistake about it that this administration wants to run fast. They are going to be looking to potentially make executive orders. They want to get they want to get their members passed quickly through Congress, get them in positions, and they want to start implementing stuff very quickly. So I thought it would just be really good to understand that, look, optimism is still running really high. I think the change, and now that we know that, look, even though we have one political party that's going to be controlling all three branches of government, which is typically not something everyone is really keen on, but everyone is really keen on growth. And it seems like this administration is really going to be focused on that. The other thing is perception is reality. We talked about it a lot last year, especially at the end of 2023 and towards the beginning of 2024. Right now, the perception is that things are going to get better. Now, will they? Time is going to tell. But perception is reality. And I think that the fact that we're sitting in the holidays right now and we still have one political party obviously fighting against the other, and we have a media that often at times doesn't really want to paint the rosy picture. However, I think as this continues to move forward and we get closer to January 20th and we get out of the holidays, we are going to see the effects of the optimism, and what the perception is that things are moving in the right direction. So what are the things that this administration plans to do that we need to keep an eye on? And I think it's just important that we understand so we can help our clients benefit from these. Number one, it's going to be reducing regulations. So the real focus is going to be on the supply side of the house, right? So how possibly might you get with your investors, or maybe you have a client that is looking to potentially buy a second home, or they want to move up. What does the supply chain and what does it mean, and what do the reduction regulations mean for them? Tax incentives. Now, typically you're going to see those more on the big builder side, but possibly would it roll down to the individual homeowner? We want to make sure that we stay on board and we know what's actually going on and happening so that we can inform our clients of any tax incentives that they could take advantage of. They also want to focus on home ownership. So is there going to be any type of grants? Is there going to be new programs that are going to be introduced? Because the other thing that this administration wants to look at is possibly bringing in the private sector. So as opposed to having government lending, right? You have FHA, VA, and everything like that. What about bringing in the private sector for development? Getting them to build some of these affordable homes, using government as well, side by side. Getting the private sector maybe into financing, allowing them to maybe take on some debt and do some financing, do some 30-year mortgages, things of that nature. It's going to be really interesting to see if this administration can pull that off. What does that even look like? But it's something to stay focused on. And the other thing they really want to do, obviously, the growing problem of homelessness. Really addressing that. And I think one thing that they're looking at is possibly using some of these government buildings that they're paying for where there's nobody working, and turning and converting them, right? Creating jobs and converting them into homes, essentially, even apartments, whatever the case may be, to allow the homeless, maybe our veterans, whatever, to get off the streets and have a roof over their head, because shelter is the most important thing. So I just want to make sure that we're aware of what this administration is coming in, what they plan to do, and how it could potentially affect our clients. So we're going to keep a closer eye on that. And then obviously the last thing I always like to talk about, I like to bring us something that I think we can all use and we can use for a touch with our clients, right? And right now, it's small changes make a big difference. The biggest thing that I've seen this past week, it reminded me that within the last 4 months, we've gone from the low 6% range on base rates and interest rates all the way up to 7%. We've had a huge swing all within 4 months. Again, it's going to remain bumpy. And the biggest thing about when things are bumpy is you want to make sure that you understand what the difference in your purchasing power is as interest rates move from a half, a quarter point, whatever that is. And you want to make sure that your clients are well aware that to jump on those. How much has their purchasing power increased? Is there a way to go back to a house that they had on their list now that interest rates are down another half a percentage point, that they can go back on their list that they can now afford all of a sudden? And I think it's just another way to make our clients aware that to get into the game, to get yourself pre-approved, to talk to that mortgage professional, to start looking at houses, so that should rates spike back up to the 7% base rates that we have seen here in the last 4 months, and we see that increase, we all know that they're going to be coming back down. It seems like we are on this roller coaster, bumpy ride, as I said a couple times now, and you want to make sure that your clients are prepared to capitalize when rates drop, because you don't know how long they're going to be down there for, when it's going to happen. So we want to be prepared. So in just looking at that, if you look at just giving you some loan amounts. For a $500,000 loan amount at 7%, okay, you're going to be looking at about $3,227 payment. If the rate drops to 6.5%, their purchasing power increases 5.2%. They can now go to 526. If it goes down to 6%, which is what we're close to now, you're talking about almost an 11% increase in purchasing power, 554,000. Should we get down to 5.5%, it's 17%, $585,000 they could purchase while keeping that payment the same. You go all the way up to $1 million, it's 5.2 at 6.5. You're talking 11% at 6, and you're just over 17%. And that's kind of the general theme across the board, from 300,000 to all the way to 1.5 million. But my point being is that purchasing power increases. There's houses that were not on the radar that you could possibly look at putting an offer in on. There's houses now that you might be able to increase their search and let them know, whoa, I'm almost at my time. I got to wrap this thing up. There's there's houses on the radar that were maybe just out of their reach, and you want to increase, right? You want to increase their search now to be at 550,000 and below, not just the $500,000 mark. So I hope that helps. I hope it gives us all another opportunity to reach out to our clients and just, once again, inform them what the effect of these interest rates moving now. They've moved within the last month here about 0.5 point. What does that mean to them? All right, everyone, have a great week. I'll be coming at you once again with the Friday wrap up. Should you have any questions, you need a pre-approval, you need a flyer, you're doing open houses, you want to grab a coffee, sit down and talk. And if you're a client out there, you want to jump on a Zoom and just talk shop, you have an idea that you want to purchase a new home, make a move, get into the investment game come the new year, I would love to take the time to speak with you. My time is free. I love talking this stuff. I eat, sleep, and drink it. So please don't hesitate to reach out at any time. All right, y'all. Have a wonderful week, and I will be coming back at you on Friday. Cheers.